Hi, today I'm going to be talking about mortgages and what they are and different types and the different types of interest rates you can get. Basically, a mortgage is just like a loan, except it's secured by your UK property which you have, which means if you or the borrower that's borrowing from the lender defaults on payment and can't keep up with the mortgage, then the lender can force a sale in order to recover any owed monies. Hi, today I'm going to be talking about mortgages. Basically, a mortgage is like a loan, however, it's secured against your UK property which you have. This means that if the borrower, you, defaults on the mortgage, you can't keep up with the repayments, then the lender can force a sale in order to recover any of the money that's owed. Now, if you're unsure about the different types of mortgage you can take, which one's best for you, I'll explain the main ones in this video today. Repayment mortgages, probably the most straightforward and easiest to understand. Basically, what you borrow is what you pay back, along with interest on whatever you have left to pay. These are sometimes known as capital and interest mortgages as well. So if you've heard of them, they're exactly the same thing. As the amount you have left to pay is also called the capital, and that's why it's called interest and capital sometimes. Interest only mortgages, this is exactly what it says. Again, it's quite basic. You take out a mortgage, and what you pay over the term of what the mortgage is set out of is just the interest. Which means your monthly payments are normally lower than a repayment and interest mortgage, and these are very popular with landlords taking out buy-to-let mortgages. At the end of the term, whatever's outstanding, what's left to pay for the property needs to be paid in full. So most people either take out a savings plan and invest to pay this off, or already have a lump sum available to pay that back. Both repayment and interest only mortgages can be structured in several different ways in relation to the way interest rates are calculated and applied. The most common types of options are fixed rate, discounted rate, capped rate, cap and collared rate, and there's also tracker mortgages as well. I'll just go over these. Fixed interest rates. Basically, these are ideal for borrowers that need to ensure monthly costs are within their set budget. The rate of interest is fixed, like it says it is in the title, and this is fixed for a set amount of term, providing the borrower with a stable repayment plan. Discounted interest rates. Basically, it says what it does in the title. It's a discounted interest rate, but it's discounted against the standard variable rate of the lender, which means the rates can vary and change because the lender can change the standard variable rate at any time. So be careful of these. And again, the amount of discounts will be set for a term of the arrangement. We also have tracker mortgages. And a tracker mortgage links the interest rate you're paying to normally the Bank of England's base rate. So basically, if the Bank of England's base rate goes up and down, so will your interest payments. Now, if you're worried about interest rates rising, then you will want to know about a capped rate mortgage. These are variable mortgages, but with a cap on how high the interest rate can rise. Usually these interest rates are higher than a tracker mortgage, so you might end up paying a bit extra for the extra security that you want. There's also something called capped and collared rate mortgage, and these are a variation of capped, and they basically include a lower limit where interest rates cannot fall below. So we've just gone over a few of the main mortgage options you can take and a few of the interest repayment options that are available. There are a few more to go over as well. However, we won't include them in this video. There's more information on our website, so if you head over to www.inflationmedia.co.uk, have a look in there. If there's something that you want to know about more, then please get in touch with us and we'll be happy to help you.